So today, the Federal Reserve announced that they're doing a quarter point or 25 basis point interest rate cut. It was already priced in, according to a lot of experts out there. And this is the first rate cut done by the Federal Reserve since Ben Big Dollars Bernanke, did it in 2008. So over a decade. Now, let me talk about Donald Trump, and he is already pissed at how it was only a quarter point or 25 basis point rate cut. Now, for those of you who are not familiar, President Trump was talking about this on Monday, that he did not want only a 25 basis point rate cut. He says it would be too small. It would be not enough. So he tweeted out on Monday, I believe, quote, "The EU and China will further lower interest rates and pump money into their systems," end quote. "In the meantime, and with very low inflation, our Fed does nothing and probably will do very little by comparison," end quote. And then he said, "Too bad." And I have an article about this from Monday if you want to take a look. So Trump is basically grumpy Trumpy or grumpy cat Trump. Maybe someone will make a meme about that, like a grumpy cat Trump, like an unhappy Cheshire cat or something. Trump also just tweeted out, and I have up his Twitter now, at Real Donald Trump. He just sent 2 tweets out in the last 45 minutes out about the Fed rate cut. So, quote, "What the market wanted to hear from Jay Powell and the Federal Reserve was that this was the beginning of a lengthy and aggressive rate cutting cycle, which would keep pace with China, the European Union, and other countries around the world. As usual," this is a second tweet, "as usual, Powell let us down, but at least he is ending quantitative tightening, which shouldn't have started in the first place. No inflation. We are winning anyway, but I'm certainly not getting much help from the Federal Reserve." So it is good that Trump is putting the spotlight, putting blame and fault on the Federal Reserve. That is a good thing. But, you know, he wants to, if you're not familiar with Trump's background, I've talked about this, other people have not. His background in commercial real estate is to borrow as much money as he can and go big. He's written books about marketing and going big. So as much money as he could borrow, he wants to borrow. And I believe he has taken that into the White House. So let's now talk about, I've talked about the history of Fed rate cuts. This is the first in over a decade. They have pissed off President Trump, but that's really not too hard to do. President Trump. But let me talk about the dollar. So let me talk about the dollar now. So shockingly, now this 25 basis point rate cut may have been underwhelming to some people. And remember, the European Central Bank has said that they are planning rate cuts too. They are planning on going further negative. They are planning on more quantitative easing. So, and my thesis has been that the US and the European Union in the past were coordinating with each other. So they were taking turns doing quantitative easing. The US was helping out European banks and European governments with central bank currency swaps and other bailout mechanisms. Well, I believe starting with President Trump, once he won that election, and President Trump implementing tariffs in Europe and the US not wanting to bail out European banks totally, that now that Europe has gone to negative interest rates and lots of balance sheet expansion from the ECB and threatening rate cuts and more QE, that experiment is not going well in Europe, that the US and Europe are in a every country or every zone for themselves situation, last man or woman for themselves. They are not coordinating anymore. My thesis is that we are now in beggar thy neighbor. These countries realize that the real economic pie, that all their government economic data is phony, and that the real economic pie is violently contracting. Everyone in Europe is getting hit with taxes. Here in the US, they're getting hit with taxes. And then there's stagflation on top of that that's not being reported. And so that is shrinking the economic pie. And we are back to beggar thy neighbor, currency war and trade war policies similar to the 1930s. And unfortunately for the people at the Federal Reserve and the US Treasury, the US dollar reacted counterintuitively. So like I said, I think the rate cuts were this rate cut, which is small, was already priced in, but the dollar index shockingly rose. So even though the Fed did cut rates, the dollar index is up to 98.56. So it moved 0.5, which is a pretty decent sized move in a single day for the dollar index. Pretty decent sized move. I mean, we've had some days where the dollar index can go almost 1% or 2%. Currency moves of 1% or 2% are no longer unheard of. But This is definitely not what President Trump, his administration, and the U.S. Treasury wants. They do not want a strong dollar. They may say they want a strong dollar in public. In private, they want a controlled devaluation of the dollar. Now, if you look at the technical analysis, the charts of the regular dollar index, which is DXY, you will see that the dollar index has failed to stay above 98 for over a year now. There's been many attempts for the dollar index to stay above 98, so we'll have to see. This does not, I repeat, not guarantee that the dollar index will stay above 98. In my humble opinion, my educated guess is that there has been intervention into these currency markets, as pretty much every government, including small governments and emerging markets and countries with reserves and countries with large central banks and countries with large economies, all want to manipulate their currency exchange rate. And so it seems to me that the U.S. government, the Treasury, as part of the policy, and probably the Federal Reserve, who monitors both dollar indexes. Remember also that the Federal Reserve created the trade-weighted dollar index, which is different than the regular dollar index. The regular dollar index is mostly a measure against G6 currencies, and the trade-weighted dollar index is a measurement which is reset every year against about at least 26 or 27 currencies. So the trade-weighted dollar index is not updated yet in the last couple days before the Fed rate decision. It was correcting at 127.8225. So we'll have to see what happens to the trade-weighted dollar index, but counterintuitively, despite this rate cut from the Fed, the market is still thinking that these other countries are in more trouble, and these other countries, like the European Union, will do even more rate cuts and even more QE than the US. And this goes back to Brent Johnson and his dollar milkshake theory. And his dollar milkshake theory is that even if the Fed were to switch from quantitative tightening and rate hikes, and by the way, a lot of flight capital has been coming into the US still over that time period. But his dollar milkshake theory is that he's been saying this on his Twitter and in his interviews. He did a really good free interview that was about a year old that Real Vision TV released not too long ago. I think it was 30 or 40 minutes long. I'll put that video at the end of this short little update for you guys. I also am going to, so he may be proven right. We'll have to see if the dollar index can stay above 98. So comment if you think the dollar index is going to stay above 98. It has failed, though, quite a bit in the last year to stay above 98 on the charts. The other thing I would bring up, and I did a history lesson on this, and citing a bunch of articles and talking about interactions between past U.S. presidents and past Federal Reserve chairmen, is that really since Lyndon B. Johnson and President Richard Nixon, and I think even Ronald Reagan, so there's been presidents on both sides, Democrat and Republican, that presidents, and this includes President Trump now, that presidents, not all presidents have done this, but certain presidents have, and that presidents have tried to bully the Federal Reserve into either not hiking rates or cutting rates or being more dovish. So remember, I talked about the chart. I put up a little chart on the comment section of one of my videos because people asked, well, what do you consider dovish for the Fed and what do you consider hawkish for the Fed? And I listed a couple things for each. So what is dovish for the Federal Reserve is quantitative easing and then interest rate cuts. And the other thing is if the Federal Reserve were to lower the reserve ratios for the banks, and that would allow the banks to issue more fractional reserve lending and to not keep as much currency or reserves. So they could issue more fiat currency and credit. They could do more speculation. They could do more loans. They could do more gambles. There's a lot of stuff that they could do with those levering up those reserves because they don't need to keep as much reserves. And then the hawkish part of the Fed is quantitative tightening, which appears to be, it was supposed to end in September. Let me see what it says here, if they're officially ending quantitative tightening sooner. Okay, this article doesn't say if they officially ended it sooner. It was supposed to end in September. I don't see specifically that it said, okay, wait. Oh no, that's Trump. Skimming through the article here, see if I missed that part. No, I don't see it. I don't see in that article at least. Check this other article really quick. Okay, Here we go. So the committee will conclude the reduction of the aggregate securities holdings in the system open market account in August, 2 months earlier than previously indicated. So quantitative tightening is ending this upcoming month. So it was supposed to end in September. They're concluding it a little bit early. Actually, they're concluding it. Wait a second. That press release might have been wrong because we're still in July here, July 31st. Okay, that press release is worded incorrectly because the quantitative tightening program was supposed to end in September, and they're saying it's going to end in August, and they're saying that's 2 months earlier. So that's incorrect. The Fed incorrectly said that. No, I found in the Zero Hedge the exact speech, and they're saying that the quantitative tightening is ending in August, but they're saying it's 2 months earlier, but it was supposed to end in September. So they screwed up there. Some lower level employee didn't proofread it. It was supposed to be 1 month earlier than normal. So the Fed hawkish signals are quantitative tightening, interest rate hikes, and the central bank telling their member banks that they have to raise reserve ratios, that they can't do as much fractional reserve lending. So we're seeing central banks, whether it's the European Central Bank or the Federal Reserve, being more dovish. And the Fed's reason is because they're going to have to buy a lot of treasuries. They're dumping mortgage-backed securities above the cap limit. They're cleaning up their balance sheet to go and buy more U.S. treasuries. And Trump has even talked about, I'm not sure if he's going to get away with this or not because Congress is not fully controlled by Republicans. Trump is even talking about another tax cut. So that would be even larger supply-side economics. That would expand federal government budget deficits even more. So we're heading at some point to far worse stagflation in the official government data. On real Main Street, we all know that stagflation in taxes has been bad and getting worse for a while, but the official government data is going to reflect that. I think even the U.S. government economic statistics was showing that inflation was starting to firm up in the last month or so. No, he's talking about more tax cuts now. He got his tax cut. He's talking about a second one, too. But a lot of that tax cut money, it was spent on share buybacks. It was not reinvested into the real economy in the U.S. Jeff says inflation will be okay, deflation is bad. I totally disagree with you. Are you familiar with Austrian school economics? So the real economy needs deflation. Consumers and savers need deflation. There's too much debt. The governments will not allow it. If you read Austrian school economics and Ludwig von Mises and some of the other great, more modern Austrian school economists, they will tell you that inflation is 100% government created. So the preference here is for all governments, whether it's Japan, the European Central Bank, the Federal Reserve, China, to all do inflation. They are hoping to control the amount of inflation. They're hoping to do controlled devaluations of their currencies. This will not end well. So I think I covered pretty much everything here. I'll attach a video to the history lesson that I talked about U.S. presidents were bullying Fed chairmen decades before Trump. And I will attach a video if you want to take a look at Brent Johnson's dollar milkshake theory more. And I think that's it for this short little video for now. Is Cash for Clunkers coming back? No, I don't think Cash for Clunkers is coming back. Well, I don't think the corporations can do more share buybacks because a lot of these U.S. corporations are triple B, which is rated one step above junk debt. And they actually should be rated junk, but there's enormous pressure on the ratings agencies. Danielle DiMartino Booth has talked about this. So they should be rated junk debt, and they're rated triple B, which is one step above junk. I interviewed Danielle about this. She's spoken on whistleblowers inside the three major ratings agencies who are still working there, talking about how they're getting phone calls every day from chief financial officers and senior executives of publicly traded companies, yelling at them to use the most optimistically bullish assumptions on cash flow projections and balance sheet so they don't get downgraded, and then threatening them. The ratings agencies are threatened to have business pulled, and former credit rating agencies employees are confirming this as well. It's just a sad situation. I mean, there is an enormous debt problem all over the globe, and the solution, and I'm using air quotes, that all these central banks and governments and corporations are using is more debt. Do I think Canada will cut rates this year? Canada's benefited from the gold rally. I don't know. Canada has problems in their banks. I just found this out, but the Canadian banks got over $100 billion in bailout money. There was an investigation and a research report that came out in 2012. And the Canadian banks, which everyone says are so great, they actually got about 112 approximately billion dollars. It was found out later in audits in bailout money. I think the TARP money, some of that TARP money here in the U.S., Troubled Asset Relief Program, some of it leaked into Canada, and the Canadian government also secretly bailed out a lot of the Canadian banks too. Look, all these banks are bad. There's tons of articles I could show you about the bad shape that banks in India have been bailed out for years. There's been 3 or 4 rounds of bailouts of Indian banks in the last 10 or 12 years. And they've been talking about more rounds of bailouts. No, those bailouts are in like the tens of billions range. They're not the size necessarily of the US or the European banks. They're not in the bad shape of Chinese banks or European banks. But you have banks all over the world in bad shape. Australian banks are a disaster. Canadian banks are a lot worse than people think. It's just they're not nearly as talked about. Unless you listen to like macro voices and you're a global macro trader or investor. Or you live in one of those countries, you wouldn't know. If you live in another country, you're not going to hear about it on the news that banks in these countries are bad. You're just not going to hear it. You'd have to do a lot of research work on your own. Andy says Powell might be looking for work soon. I agree. I mean, he's rich. He doesn't need this job. But yeah, he would get his ego smashed. Yeah, I think Trump will try to fire him. If he doesn't get another rate cut soon, I think Trump will try to fire him. So I would watch the dollar index. I would wait and see what comes out with the trade-weighted dollar index and how it reacts. But right now, the dollar index is counterintuitively rallying. So I would say my educated guess would be that it thinks that the rate cuts and the QE for the European Central Bank is going to be larger than the rate cuts and the QE right now for the Federal Reserve. Now, things can change, but that seems to be. And my thesis, again, is that we have restarted a currency war and trade war the U.S. has with the European Union. And that is because these major governments are all fighting over a declining economic pie. The real economy is contracting violently with inflation, real inflation, and taxes. My favorite for Powell's replacement. I don't know. Trump couldn't get any of the people he really wanted in. Remember, he couldn't get Steve Moore, who's a super dove. He couldn't get any of those guys in. Herman Cain. Herman Cain was a successful businessman. They couldn't get him in. So I don't know who Trump's going to be able to get. He's probably going to have to pick from someone already there. Lael Brainerd would have been Fed chairwoman or Treasury Secretary had Hillary Clinton won. So Trump may pick Lael Brainerd. But she's a registered Democrat, so it would be weird. But Trump seemed to get along okay with Yellen for a while. We'll see. I have no idea. I wouldn't be surprised. Let me put it this way. I wouldn't be surprised if Lael Brainerd got promoted. Because Trump has been promoting a lot of women to a lot of positions. For whatever reason. Although Brainerd hates him. She's very political. She was actually, her comments the last year or so, she's been a little bit more honest, quite a bit more honest than some of the other Fed chairmen. And I think the reason she's been putting out more honest predictions was because she wanted to look right, have a track record for good predictions, rather than lying or propaganda like some of these other Fed chairmen like Mouthspeak for propaganda or bullshit to move the markets. And she wanted a track record for being right so she could get a job promotion. That's my educated guess. Peter Schiff wants to be the Fed head. Yeah, there's no way Peter Schiff's going to get approved. I love Peter Schiff. He's a great Austrian school economist. He is wrong on China, but there's no way he's going to get through Congress and the Fed approval process. There's no way they would allow Peter Schiff on the Fed. That would be like saying that Ron Paul should be the Fed chairman. I would love that if Ron Paul was the Fed chairman and he dismantled the Fed from the inside out. It's just not going to happen. There's reality and then there's hope. And that's hopium. There's no way that Ron Paul is going to ever get on the Fed. Oh, I would love that. We can make a movie about that. Ron Paul, secretly dismantling the Fed from the inside out. That would be hilarious. I'd pay to see that movie. But we're not going to get it. It's not going to happen. Not when Ilhan Omar is retweeting about how bad Ron Paul is. Like he's a white nationalist and racist and all this other bullshit. And how Rand Paul deserved to get assaulted. You know, meanwhile, the mainstream media doesn't do any real journalism, investigative journalism. Okay, guys, well, that's it for right now. I will attach links to all these stories that I talked about. So comment below the video what you think about the dollar and the Fed rate cuts. It is, President Trump is pissed. I wouldn't be surprised. Oh, looks like we have another tweet. Let's see if President Trump tweeted once more about the Fed. Looking. Nope, he did not. Only 2 tweets about the Fed, but I'm sure we'll see more. He is very pissed. So I could definitely see in the next month or two Jerome Powell potentially being fired. That would be kind of unprecedented, though, but I would not. It would not shock me to see Trump do it. Okay, guys, bye for now. I hope you enjoyed this update.